A happy Thursday. Hi, guys. This is Jimmy, your favorite NLP coach. I'm not sure about you guys, but for me, this day feels actually like a Friday. I think that's my mental issue for this day. Mr. Richfield, how are you doing today?
I'm doing very good, mate. I have to say, I'm very buoyed by your Friday feeling energy that you've got today. Jimmy's got some real positive vibes going on today. It's very infectious.
Well, why not just celebrate two Fridays for this week, right? I mean, we have to celebrate a lot. I mean, we gave a lot of some good cause for the community to the community. Some nice trade setups. Some of them we've been stopped out, which is a normal consequence of trading frequently. Even
Mhm.
if you don't trade frequently, there's always a chance to get stopped out.
Mhm.
But it doesn't matter as long as your mindset is strong enough. You can bear that adversity of stopping out and losing money. I always say when the why is really strong, then the adversity to manage and tackle, absorb losses will become really easy. So today, guys, there are a few setups I would like to share with you. Actually, one. I have one, but Mr. Richfield has another one. I'm actually in a Polkadot trade, and I would love to explain why I entered this trade. And I would also happy to tell you when I think it's a good time to re-enter the trade, which is now not the case, but there is a certain level I have highlighted that I think, hey, if there's price acceptance there, then I would be happy to add to my current trade, or that would be for someone else maybe a good entry. Maybe you're not aware of it, guys, but we do give a lot of signals. But it's not only signals. We are not like this per se signal group. Within the Birdnest, there's few things you can expect from us. You can ask it, on any member, and he will confirm this. We always consider ourselves as an educational hub, so that's the reason why you will see a lot of educational content in the form of live stream and write-ups about trading psychology, macro events, basically about everything that covers the whole trading spectrum. So, without further ado, I would love to share with you guys my chart. And just for the sake of clarity, I'm gonna remove myself from the screen, and also you, Richfield, with your beautiful face, so you can see the chart more in its totality. By the way, guys, if you're live and you're on YouTube, say hello, say something, let me know where you're from, what you're trading, and if you have any questions, please do let me know. So first with Polkadot. I entered Polkadot on the 14th of February. So that was basically a Valentine's gift I gave to myself. I was actually monitoring Polkadot for a long, long time, to be honest. And I will tell you why. So Polkadot was in a obvious, very obvious downtrend. But people who know me, they know that I'm a big fan of falling wedges, and especially if the falling wedge is accompanied by a strong bullish divergence on the RSI, OBV, or even better on the Birb Pro. So this actually would have been the ideal entry, which I personally I missed because when it comes to trading, there's always what we call like opportunity cost. You cannot enter every trade. I personally I chart more than I trade because of charting. You see the setups, and every time when you have different setups in mind, you cannot execute all of them. There needs to be you need to filter out some of your trades setups and try to trade the setups with the most conviction. So this is actually what I missed. So we don't give up. We always ask ourselves, what is actually the next best entry to enter a trade if you missed this trade? So instead of feeling sad, frustrated because you missed something, try to think at front. Think about where the bulls are feeling depressed and exhausted, where the bears feel exhausted and tired, and where sidelined money could possibly enter the market or enter a certain pair. So in my case, it was actually this level, this green level. This was actually my buy range. I would love to explain by giving you guys the detailed explanation. Maybe it's not that very detailed, but as you can see, this is a call from the 14th of February. So this is nothing in hindsight. This is a real call. I mentioned about the falling wedge. There was a breakout. It was not displayed on the chart, but people, they do know that I always check falling wedges, especially when they are combined with the falling wedge, because a falling wedge suggests, hey, a reversal might happen. A bullish divergence, especially a double bullish divergence, suggests, hey, there is a reversal. It's a warning sign. Hey, a reversal is about to happen. So I have actually two layers of entries. They confirm each other. So then Polkadot made a move up on the hourly, on the daily chart, and a hidden bullish divergence has formed not so far away from support. So there I have another how do you call that? An entry, a confluence in entries. So it was not that far away from support. So it's actually basically this level, and there was a hidden bullish divergence. For me, in my textbook, this isn't reason enough to enter a trade, even if there is a CPI coming or PMI or all these other economical high impact events. And honestly, most of them, I don't even know what they really mean, but I do know that volatility is about to happen. So this also encourages me to have a wide stop loss in a swing trade. So that lowers the chance that I get stopped out, and then the call or the trade setup moves into my initial desired direction. So within actually a few days, let me see, in 3 days, not sure who also entered Polkadot with me. It touched our first TP, which is basically this line, as you can see. And then it continued going up. So if you would only trade like the first TP, it would have give you a R of 1.3. People who, not sure if people did, but if you would have exited here or took profit here totally, then you would have an R of 2.2, which is not bad. But I have a different game plan. I have higher targets in mind. And I know this market could be a little bit choppy. So when Polkadot touched my first TP, I decided to not move my stop loss above entry. It always comes with a price, right? There's always pros and cons. Pro, okay, it could give me a risk-free trade, or it could even lower my risk. The con is, if it hits my stop loss, then I get stopped out from a position which I have missed out earlier when it just broke out from the falling wedge. So putting my risk appetite, I'm happy to not move this stop loss and to keep it where it is. But if I see Polkadot going down and losing this pretty significant, not very significant, but significant enough um, support resistance level, then this could be like a big ugly deviation, a really ugly one, and it could go lower. But if Polkadot, and that's like the but scenario, if Polkadot comes down here, touches this level, this gray area, I don't use per se, thin lines, because I don't. Yeah, you could use thin lines. Personally, I witnessed that thin lines don't work for me, so I love to work with ranges, big ranges. If Polkadot comes here and it gives me like a good bounce, and it gives me some solid candle reversal patterns like a hammer, especially a hammer. That's what I often use. So this would be like a good level to enter Polkadot if it finds price acceptance here. But for now, I just let Polkadot play as how it wants to play. I have I will tolerate both outcomes. If I get stopped out, well, that's too bad. But then we just move on to the next trade. If it goes up, that would be lovely, because then I can take profit again and reallocate these funds to something else. So that's actually, in a nutshell, my Polkadot thesis. Happy to give you guys a update next week. And if there's any question about this specific trade, please do let me know, and then I will come back to you. But now I would love to give the word to Richfield, because this guy, not sure what he does in his weekend, but he never sleeps. Actually, he's always trading and trading, even on the weekends. Even though I tell him, "Hey, guy, listen, weekends are for chilling out and doing something else." But sometimes he listens, sometimes not. And last week was a typical situation where he wasn't listening and pursued something which actually made us some nice money.
That is a brilliant intro, Jimmy. Thank you very much, mate. Well, actually, surprisingly, I do listen to Jimmy a lot. As belligerent as I can be, I do try and always listen to the smarter people around me. And they always say, surround yourself with the smartest people, right? So just to run through this one quickly, guys, Jimmy's actually right. I don't normally trade at a weekend. I normally like the volume and volatility that we get with traditional markets being open. So this was a bit of a rare one for me. And I have to give a big shout out to QBS, our magnificent in-house designer, and also a really, really top trader himself. We've been, as a team, obviously we talk a lot, and he contacted me. We were chatting on Saturday morning. He said, man, CRV just looks pretty tasty for a swing trade. And now I'm obviously more of an intraday trader. So when someone says that, it makes me think, well, maybe there's an opportunity to get a kind of, a cheeky scalp, or maybe a day trade in there. So this is what this is made up of. And I've started us today on the actual call, which was taken on the 18th. Explanation is very, very simple. It's a long into equal highs, which we can see here on the chart, based on a high time frame support resistance flip of a key level and bullish momentum. So let me flip you over on here onto the chart. We can see here, as we do with all of our trades, I was allocating only half a position size to this because it's a weekend. And invalidation is going to be running to TP1 without first retracing. So I like to see market structure shifts. I like to see retracements into fair value gaps or breakers. And then from there, it just gives me that little bit of confidence that the market's found the strength it needs to either push up or push down to, first of all, our kind of inner range targets. And then we set extended targets beyond that. So with that in mind, let me ping you over onto my screen and we can take a little look at the actual trade itself. For right now, apologies, you've got to deal with our smiling faces for a second while I while I find the tab. Here we go. So always sad to see Jimmy go. Always sad. So let me take a sip of my tea. Stick with my very British theme. And here we go. So I've just popped this on replay, guys. Obviously, it's not live now. I've started here on a 15-minute chart to just kind of zoom it out a little bit, so that you guys can kind of see the structure a little bit more before we get into the real kind of minutiae on the lower time frames. Now, what was really of interest for me here was originally, before we got this purple box in, we've come into this point of support and resistance here. Now, this is based on high time frame weekly and daily levels. The purple line is a key weekly level. We've shown a very strong SR flip of it here, and the green line down here is a daily level. Now, when there's confluence between two key levels, a lot like Jimmy said, support resistance levels aren't really the lines that people make you believe them to be. There's so many factors that go into price kind of holding and flipping that line. It's much more of a level, right? So when we see it as a line, we always make a little bit of allowance either side of it. So when I've got two key levels like this, and they're so close to one another, then I'm treating them very similarly to what Jimmy does, like a box. So I want to see the box held, comes up, and then I want to see strength as we come into this area here, yeah? Because we can see here, this initial punch above, notice like the V-shaped rejection here, showing weakness, showing that there's too much sell pressure up there for price to hold. However, we get this punch up above, and then we kind of hold this area. Then we start to build a bit of structure here, and we can see that price is finding buyers, okay? So we wait, and I like to see price settle. I like to see price come back down and hold this level in terms of a retest. And then I'm looking for a structure shift in here, right? I'm looking for lows to be swept, in which case on the kind of raid front, we were looking at this low here. We've got the lows left here. Price has come down, swept out liquidity below here and below here. And also, it swept the local low here before recovering. So now if we drop this down onto a 5-minute chart, which was our execution time frame, we can start to see this a little bit clearer. Now, this was a compounding opportunity that we had within the trade when it had already showed us the strength down here. It came and gave us a second bite of the cherry here. But as that's not the trade we're looking at, I'm just going to get rid of that for a moment to avoid confusion. So these are the equal highs that we're targeting. Why? Because that's where we believe liquidity's resting, all right? Now, something stopped the market twice here. Our assumption has to be that if there was good sell pressure there before, then there's probably sell pressure there again. So what I'm doing is I'm looking straight away and saying, like, okay, what's my risk to reward up to this level? And where's a realistic place that we could get rejected? Now, this, for me, holds a lot of interest because we came in at this point, we've broken down. Now, this was the area of breakdown for me, and we can see this purple box here has been held. So when we actually got to this point and we got to target 1, this purple box for me became a key area to hold. In the same vein that we've shown resistance, 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 we now want to see it flip to support. And that gives us confidence in managing this to higher time frame targets. But as we came in, the entry was really, really simple for me. We've held this level. I'm now looking for price to come in. We've got our raid, right, which is our liquidity sweep on this low, also taking out these lows. Now we can see this immediate recovery. So we want to see strength. Then we want to see a sweep, which is our local low taken out. Okay. Then we have this big impulse move higher. This is what we want to see, right? We want to see this strong move up. This tells me that buyers are stepping in here, right? Now, I'm then interested in 2 things. One, I like to see an inefficiency, right? So I either want to see a fair value gap in here in this move up, or I want to see a breaker, right, which is our last up candle that led to the purge lower. So this is the up move that purged liquidity. I want to see this flipped and held. And then that way, when we break above it, we get space and time between price leaving and showing strength. We place our limit orders on here, and then we got filled just down here. Then as the trade played out, we manage the trade, we wait for our first profit targets, we got to TP1 above here, and then we find a key point of support and resistance. For me, was this level here, where we can see, as we said before, we found resistance, resistance. This was the origin of the breakdown here. So to see the fact that there's so much sell pressure in here, when we flip this, gives us confidence to get up to our second target, which was around about here. We then put in an extended target up here for just the last 20% that we left ride. And we came to within, I think, 0.003 of that. All right. So then, again, managing this on the way down, we look to our box here. When we lose this box, and we retest it, as we can see here, and we show the weakness, this is our key to scale out the remaining 20% of our trade. And that's it, guys. So I hope we didn't lose too many of you in that explanation. I tried to keep it a bit punchier than I normally do. But if you've got any questions, guys, please do feel free to pop them into the chat. Or, like I say, come and grab one of our, if you're not already a member, come and grab one of our free trials available in the description. Come and chat with us about it at the Nest in the community. You can come and find us on Twitter as well and have a chat with us. But you can also come along and get these trades for free if you want to trade with us at Bybit. I believe there's a link in the description for that, isn't there, Jimmy?
There's a link. There are many ways. What you also could do is maybe for this purpose, I have to share my screen, guys. It's really easy. We do offer like different services. Each service comes, of course, with its own price tag. You can get the calls only, which covers actually like mainly calls, but also some education, but also especially education on the website itself. There's a course you can get access to. Pricing, it's maybe gonna surprise you because you can get this as cheap as for $0 and 00 cents. Always make fun. I say if you don't like this plan, then you will get money. Then you get your money back. So if you just purchase this, it would cost you $99. But if you do this through Bybit, then it's just $0. And for the requirements, you could go to the Bybit link which basically tells you if you deposit this amount, then you get 1 month free. If you do this, then you get this amount of free. So it's actually a ideal way to get bonuses and a fee, a discount on fees to trade on Bybit. But maybe even more fun would be you could try us out actually for basically almost nothing. And there's also like a free trial. We do give this free trial because we do believe in our qualities and the content we push and the support we deliver. I would say just try it out. I would say like try before you buy. And I wish this was the case for many, many other services that they're out there. It's always good to to experience it yourself if it's something that fits your system, your personality, your vibe. If it isn't, we just remain friends. If it is, we are happy to continue this journey with each other.
Yeah, that was so beautifully put, Jimmy. That was so much more eloquent than I could have put it.
Nah, you're giving me too much credit. You with your British accent can do this maybe 10 times better than I can do. But anyways, what I do think like this whole live stream is, of course, to talk about the trades we made. We're also going to cover like next time some losing trades because there are also some lessons in it. And also to give you guys like an understanding of different trading frameworks. I have a different system than Richfield. Richfield has a different system than our other TA analysts. And I'm not saying that you should copy every one of them, but there is some line that has commonalities with all these analysts, and that's they're pretty consistent in their execution. They don't give a damn if they lose the trade or win the trade. They just move on, and that's actually the mindset we're trying to cultivate within the bird nest. And there's always a next trade. There's always a next trade. So I personally, we don't judge ourselves based on our last trade. You are not as good as your last trade. That's a myth. We always look back to a long series of trade, and then we do a self observation and we judge our performance.
Mm.
I
I think that's a really good point, actually, Jimmy. Sorry to jump in on that, but I think when we start working with a lot of people, I think a lot of people get caught up so heavily on what their recent trades are doing, and then look to really flip systems very quickly, or look to jump on board with, whatever they're looking at on Twitter or YouTube for someone that's posting really successful charts. But it's so important that you're back testing this. And that you make sure that it's robust, which our dear friend Pedro Pedma7 is always going on about, and he's so right. The robustness and the back testing of your system needs to be so key moving forward, because when you go through these patches of losing trades, which everybody goes through, right? The markets aren't rational. What we're doing is we're putting systems in place that allow us a higher probability chance of getting things correct. But like anything, it's a living, breathing organism. It's dynamic. So you go through great periods of up, you go through periods of down. It's about managing the drawdown, right? And I think what a lot of people see, and that's kind of put across on Twitter, and a big reason we wanted to do this, and like Jimmy said, why we share losing trades as well as winning trades, is because that's the truth of trading. Most professional traders, myself included, didn't come by any form of wealth or success in overnight. Years and years and years of learning your craft, the same way as it would be for a solicitor, for a doctor, right? But actually, I always say this, but I really genuinely believe it. The money is a byproduct of a successful trading strategy and mindset, right? People that go out to think that you can go and get these 1000x altcoin gems and that, sure, we have people like that, and we have an amazing fundamental team that are out hunting for those things every day. But the majority of traders are making their money by compounding their wins, not spending the money, keeping it in the bank, compounding small regular wins, but understanding that it's a strategy that plays out over time. And I think that's really, really good. And I think hopefully this is what we hope to bring with this series of trade reviews, is showing you why we took trades, why those trades didn't work out, offering transparency, offering our call transparency. Obviously, we have a really huge community as well, that hold us accountable for our actions. So I think I really enjoy doing these. I hope you guys get a lot of value out of them as well. And like I say, I've got a quick question to answer in the text. But just before I do that, just want to say, if you've got any questions for this, guys, or if it is something you're curious about, you can take advantage of the opportunity to join free through Bybit. It's just a referral link. or join the Nest Club for 7 days on a free trial. Engage with the community, find out if it's for you or not. It's not going to be for everyone, right? We're not just trying to. There's no hard sell here. We've got a community of great traders, people that want to pursue financial freedom, and off the back of that, that's what we look to support, and that's what our goal is to help people and equip them with the right tools to achieve their financial freedom. Okay, so just one quick question before we finish up from Sebster. Could you explain what liquidity means in practice? Does it equal previous buy-sell orders, current unfilled sell orders, or expected buy-sell orders? So I'm sure people will have different kind of thoughts on this, Seb, but for me, it's very much where liquidity is resting, right? So it's looking at where I'm not really a big fan of this term because we're retail as well, but you're looking at institutional buyers and retail buyers, right? And what you're looking at is if I'm a large player and I want to get a large order filled, then if I'm jumping on board, say, a bullish trend when everybody else is in the bullish trend, then the chances are the size of my order is going to induce a lot of slippage, meaning that I'm not going to get the best entry. Therefore, I don't have the best stop loss, and I certainly don't have the best risk to reward. What a better thing to do is to wait for price or to try and make price head to a certain area where there's going to be a lot of stop losses, where there's going to be a lot of liquidity, right? So above key highs, below key lows, equal highs, areas like that where, traders are going to believe that if we break through those areas, the trend is going to continue. But actually, those breakouts and the hits of those stop losses from people that were in the opposite direction creates a giant liquidity pool to fill orders of bigger players. I go over this quite a lot on my weekly live stream. So like I say, do come and grab me in the Nest. I'll happily go through in a bit more detail, share some charts with you and stuff. And I'll also look to cover it as well on Monday. But I hope that answers your question, guys. For now, I think we're going to wrap this. It's been a really, really cool show. And yeah, I'm going to hand back to Jimmy to say his goodbyes. But thanks very much, everyone that's tuned in. I look forward to catching you. Have a great week and a great weekend.
Yeah, happy Thursday, guys. Make this day count. Make sure you do something useful today, as always. And make sure you also give a massive like for Richfield, for all the content he's sharing and all his ideas, and that comes from genuine, true intentions. Guys, if there are any other questions, you guys know me how to find on Discord. Otherwise, feel free to DM me or tag me on Twitter. For now, I would say bye-bye until the next week.
Take care, guys.